What's up, everybody? Wall Street Jesus here, Tuesday post-game show. Go over some markets, some sweeper activity, give you guys an update on where sentiment stands short-term, intermediate term. You probably have a good idea where we are on the short-term front. But interesting spot in the market. And we'll go over a couple things to keep an eye on the rest of the week. Or in coming weeks. And we're coming up to a crucial spot, in my opinion. I'll tell you why. Let me pull up SPY. And we're seeing some decent action. I mean, compared to obviously the downdraft and that liquidation phase in December, much better activity, obviously. Okay. And, confidence gets back into the market. You had the holidays. Pretty much it was just an all-out buyer strike. And that played into, I think, the over-exaggeration to the downside there. And, the market's basically retracing a lot of that, making that up. Okay. But all in all, I've seen rallies or squeezes that the call sweeper activity was just flat out pathetic. Okay. So that does happen. Just because the markets are going up, price is going up, doesn't mean that call buyers need to necessarily be aggressive. So that could be the worst case scenario in a squeeze off a bottom, is where we're not seeing much of any sweeper activity. And that would be a sign of caution. Okay. So that's not the case here. There is some half decent sweeper activity out there. The problem now in both flow, sentiment, and price action is a lot of times when you get this exaggerated downdraft in the market, you get this overshoot to the upside in a sense. And I'm not even going to say overshoot, but the market just feels like it's going up every single day. Everybody's waiting for that pullback, right? Everybody who wanted to see somewhat of a bottom in place before they put some money to work, they have that frame of mind where, okay, I'll wait for a pullback and then I'll get back in. And a lot of times what happens, the market gives the impression that it will never pull back. Okay. And even though you got a lot of retail players out there saying, I'm not chasing, I know that's not the right thing to do, I'm not chasing, eventually they end up chasing. Okay. And that's usually when, the market will find a way to start selling off. Smart money starts to take some profit. The algos flip sides. Okay. So we're going to get to that point sooner than later here, right? We're in that mode now where the market just feels like it's never coming down. But there's no way of knowing when exactly that takes place. Okay, and that's where this sort of environment right now that we're in gets a little tricky, because you want to be prudent, right? You don't want to necessarily chase anything. If you're trying to short into this, last couple of days you've been getting run over. And that adds more fuel to the fire, right, on the upside. So that's what's taking place right now. Okay. For me, I hate, especially when I'm starting to see readings of some of those short-term sentiment indicators starting to heat up and get cooked. I hate this time frame. I hate this situation we find ourselves in right now. I can't wait for sellers to come into this market right now, because for me, in my opinion, that's where we're going to see the true colors of what exactly is taking place here. Okay. And what I mean by that is, let's say even this market grinds higher for a couple days, stalls out here, and you get sellers, you finally get a down day, sellers can snowball into something a little bit bigger. That's where I'm looking for whatever activity we're seeing come in now, right? All the call flow, all the call sweeper activity, all the stuff that looks half decent that's been coming into the squeeze, that's where I'll get my answer to if they're real or not. Okay, because what happens is if we did put in at least an intermediate term bottom, at some point in time when they finally do sell this rally, sweepers are going to come into weakness and look at that as an opportunity. Okay, as opposed to, you know, these type of rallies back here a little earlier, a couple months ago, where you had call sweeper activity, bullish flow, you had a decent squeeze, and then when weakness finally showed up, call buyers hit under a rock, right? And from my experience, what happens is, you know, the machines, the smart money out there, they sniff that out, and they will continue to test the market with more selling, more selling, more selling until those buyers show up. If they don't, right? If they don't show up, example, into the holidays, that's where you can get, you know, a decent leg south. All right, but I'll give you an example of something we went through similar. Most recent example was around here. Okay, so this was back the volatility panic attack back in February. We had that initial selling, then some buyers stepped in. We had a squeeze, right? We had, you know, again, bullish flow, squeeze flow into this rally here, and then finally, right, it just gave the impression that it was new highs in a straight line. And soon as retail capitulated to that thesis, that's when this selling took place. Okay, happened quick. And buyers showed up literally into the lows of this pullback. Okay, and then you had another squeeze. And what changed this go around was buyers didn't show up as early, right? Buyers showed up at lower levels. Okay, but you get the idea of what I'm showing you here is that for me, I get the real answers to what flow is trying to tell me out of this phase, not this. Okay, here I'm looking at the start of the squeeze. I want to see obviously sweepers in the middle of that. Okay, so at least I can feel good about the squeeze having some legs. All right, but that's at the initial, at the start of that squeeze. All right, after a while, you know, after a couple of days, I think we're up 7 out of the last 9 days, something to that effect. I sort of lose interest in the flow, not lose interest, but you guys know what I mean. I'm more excited to see selling come into the market than flow coming into green. That's basically what I'm getting at. All right, so, and we were talking a little bit in the room, and you know, this is a topic of conversation all over the place. You hear CNBC, clowns coming on every 2 seconds. This is a bottom, this is not a bottom, like they know is the funny part. You know, they sound like they actually know if the bottom's in place or not, where nobody knows that. Okay, nobody. They can have a gut feel about it. They can pretend to have some confidence behind it, but nobody knows. All right, for me, my guide is, again, you know, like a lot of you guys look at price action buyers and sellers. I'm basically looking at the same thing, but I'm just looking in the options market. Okay, and the reason why that's significant, it's telling me how, and I don't like to use the phrase smart money too much, but the players who actually create the price action, all right, if they're aggressively speculating with confidence on a particular direction, all right, that gives me the edge to feel better about a thesis, if that makes sense. All right, so that's exactly what I'm looking for coming out of where we are today. right? I don't know how deep it gets. I don't know if it goes back and tests the lows of December. That would be spooky. Okay. Or it could be something like this. I'll tell you, something like this will wash out a lot of that bullish sentiment on the short term indicators. No doubt about it. This right here. All right. But again, we don't even need to pretend to forecast these things. All right. If you're a member or if you're a follower of flow and sentiment, there's no reason to try to forecast these things. They're fun, right? They're fun to do. They're fun to attempt, but you're just wasting brain cells and time. We want to see where sweepers decide to come back into weakness and come back and start to buy things. And that ultimately will be the telltale sign of what we may have in place. Okay. And that's what a lot of you guys have probably heard me mention since we've been rallying here, that based on intermediate term sentiment, okay, which is different than short term sentiment because it's not necessarily trading emotion and psychology. It's more investor position psychology. All right, that longer term sentiment, intermediate term sentiment. That is signaling to me that there's a high probability of, I would say, something at like this at the least. Okay, something like that at the least coming out of those lows over the holiday, the Christmas lows. All right, and the reason being, the logic behind it, and again, if you were on Saturday webinars, we went through this a couple of times. The logic behind it is that we could be in the worst bear market, the most vicious, bearish downtrend you could possibly imagine. But my experience is when intermediate term sentiment is that bearish at an extreme like we saw into those Christmas lows, that you most likely are going to see something like this to wash out a good amount of those bears. All right. And this is exactly what the market's been doing, even from the start of this pullback to where we are now, right? Net, we are well off the highs and some scary pockets in between. All right. But if you talk to anybody who's shorting out there on a position basis, on a swing trade basis, and they're being honest with you, they're telling you how difficult it's been. All right. And that's my point. All right. That's my point when, a lot of trolls on Twitter, they like to throw that perma bull label on me and bust my chops. And that's what makes shorting so difficult. Okay. Because even if you're right, even if this economy is in shambles, there's a global slowdown like we've never seen before, there are going to be sharp rallies that you probably didn't even see in bull markets over a short amount of time. So in my eyes, it's no different, at the least no different than waiting for a long setup out of this, okay? Because you're doing the same thing just on the opposite side, all right? The difference is that if you're looking to short, you got to find a spot here at some point, right? Into strength, you're going to find an entry at some point here. If you're going to have success shorting throughout this bear market, if it continues, at some point you're looking for an entry on the short side and hoping to not get run over. And the problem with that is it doesn't just reverse and go south. Sometimes maybe it will, but there'll be even intraday squeezes that make it look like and make it appear like this market is just going to continue higher. So it's difficult to say the least. Okay, but that's the point I was trying to make to you guys at the start of this pullback, when I was just trying to bring up the point to a lot of you out there, especially for whoever's new to trading or hasn't found any consistency in trading yet, that getting short here because you're hearing how bad this market is not your answer. Okay, is not your answer. And in my opinion, if you're new to the market, or again haven't found success up to this point, you're better off, in my opinion, moving all to cash and doing nothing than trying to make money shorting this market. All right, but we went over that point. I don't need to go into the short rant again, and then the bears track me down at the end of the webinar and try to have me whacked. All right, but the point being here now, if you're looking for a window here, a long entry, okay, that's what we're looking for, guys. We want selling. We want selling here. We want selling. Okay, and that's where we're going to get the real answer. What do we do in the meantime? Okay, that's the most important question, I think, in a player's mind in this game, right? In a trader's mind. I think that's where most players or traders in this game get in trouble. They know what setup is their bread and butter. They know where they can make money, those high probability trades, but waiting around for them, how do they stay out of trouble? Okay, that's, if you go around and ask traders that have been in this game for a decent amount of time, they'll tell you that's the problem. Each and every trader who has experience, they have those high confidence setups. Well, yeah, they can lose money, but they know net throughout their career they're going to make money when those things line up. But what do they do in the meantime waiting around for that stuff? All right. For me, my answer to that question was day trading. Okay. And you're probably saying, well, how is that an answer? And I'll tell you how. I'm day trading the equity. Okay. I day trade the equity. So I can minimize my risk, right? And I know that basically, if I don't have a setup there that I'm comfortable with, okay, one, if there's no call sweeper activity, I'm not trading, period. All right, so that's one of my seatbelts. But two, like, for example, let's take today. All right, I don't want to start a swing position here. I just don't want to do it. Okay, I know the risk reward is not in my favor. Yeah, the market could continue higher over the next couple of days, week. All right, but I don't even want the thought about worrying about getting out in time before there might be a pullback. Sentiment's telling me right now the risk reward is not favorable. That's all I need to know. All right. So what I do on days like today, when we get a fade intraday, okay, and I see some call sweeper activity come in that looks interesting and that I feel can create some intraday momentum, that's what I'm looking to take advantage of. Okay. Am I going to make a score by doing that? No, the likelihood is not. Okay. But at the same time that I'm trying to grind it out, maybe make a couple shekels, I keep myself out of trouble, because the last thing I want to do, where I would become suicidal, is putting on 2, 3, 4 swings against, sentiment signals that are telling me would not be the prudent thing to do, and I get caught. Okay, so that's my answer. That's, for me, that's become a solution. I can't get hurt. I feel confident that I can make a little bit of money, but more importantly, for me, my risk is minimal because I can stop myself out. You understand? And I'm not looking for too much upside. So that's you eventually, you will have to find something that does the same for you. There's no way you're going to come to your desk every morning, fire up those screens, all right, and play the same way each and every day and find success in this game. It's not going to happen. It's not going to happen. Okay. You could count probably on one hand how many players can do that and find success in this game. All right. So my advice to you is you're going to have to find something similar to what I'm telling you about, something that can keep you entertained, keep you satisfied. You're not going to get rich, but at the same time, you're not going to break yourself, allowing, that better risk reward setup to materialize. All right. And that's what you would be doing right now, waiting for some weakness to find itself in this market, and then we get an answer. Okay. And here's another thing too. It doesn't necessarily have to be a big wash. I'll give you an example. We could go down, let's say tomorrow we're red, right? Let's say tomorrow we gap up a little bit. There's that reversal day. It looked like today there was a shot at that. All right. But it goes to show you how tough it is. Like if you shorted that today, you got caught. And that's what probably added to some more upside throughout the session. All right. But there's going to be a day we likely reverse or end up lower. Okay. And it may be that following morning, there's a little more weakness and we see sweeper activity come into that weakness. All right. Sentiment most likely will be in a lot better shape. And the sweepers are telling us that they're willing to put money to work here. Okay, so don't think it has to be, a test of the lows or a certain degree of a pullback or anything like that. We just want some of these shorter term bulls to get shook out and sweepers to show up. Okay, the bad news is throughout this whole entire correction setup, whatever you want to call it. Okay, since we topped out back here in October to where we are now, we haven't seen that. That's the bad news. Okay, if you remember, I was saying it off this pullback, right? I was saying it into the holidays. Buyers just were invisible. All right, so there is a chance that could happen again. Very possible. But if that does happen again, that's just as strong as a signal, in my opinion. That if buy, as opposed to buyers showing up, because it's telling us they still want no piece of this thing. All right, so that's basically where I'm at. What I'm looking for, what I'm looking at. I see someone threw out the question, can you define intermediate term? It's not necessarily just time frame. Like when I talk about intermediate term as far as even like sentiment readings and indicators, I'll give you an example. We have a lot of short-term indicators. One moves intraday. Okay, so we're getting intraday readings. Another one updates at the end of each session and can move around a lot. In other words, we could be at bearish extreme today, and in 3 days, we could be at bullish extreme. All right. The intermediate term indicators are more of a longer term picture. They don't go from bullish to bearish overnight. A lot of them, to be honest, a lot of those indicators report weekly as opposed to daily because of the lack of movement. Okay, because what it measures, it's measuring positioning, not traders. It's measuring positioning. Okay, how hedge funds, professionals, longer-term investors, how they're positioning in the market over the longer term. All right. And just to give you an example, down here into the lows into the holidays, as a lot of you guys who are members remember me telling you guys, I haven't seen intermediate term sentiment readings like we saw into this low since 2008. Okay? So it goes to give you an idea. Since 2008, some of them lit up into the 2016 low, some of them lit up green into the 2011 low, but all of them I haven't seen light up since 2008. All right. And even in 2008, what happened was when they did light up, we had what I'm explaining to you may happen here, even if the market's as bearish as hell. And that's a rally over the intermediate term. Let me show you so you can get an idea. You know what? Let me put my line up here. You guys will laugh. The line, you guys could see better too, just so you get an idea. Hold on. I just want to give you guys an idea what the hell I'm talking about here. And again, if you're a member, we went over this a couple of times, so you know what I'm referring to. But it's good. Like, I like to look back at markets not for something to play out identical or mirror images. I like to know, worst case scenarios. What happened when this failed? What did the market look like when that failed? When these sentiment readings, lit up and there was a rally, what did it look like? Just to get ideas of stuff to keep an eye out for. Okay, so here's the 2000, this is Armageddon, right? So you had this, then this. See this? Okay. Into these lows, that's where we had every indicator on the face of the earth, short term, intermediate term, long term, light up green. Okay. Nobody was bullish. Nobody. Everybody thought the end of the world was coming for good reason. And then this happened. See this? That's what I'm referring to. See the lower highs, higher lows, higher lows, sort of an uptrend thingy. And then at this point here, though, okay, everybody who threw in the towel and gave up on the market here now is saying, oh man, maybe this market bottomed, and this is an incredible buying opportunity. All right, so it flushed out a lot of these bears. Not only that, everybody who was shorting here for catastrophe got squeezed to death and capitulated up here. Okay, so everything that was lighting up green bullish settlement, everything, I'm not even going to repeat that. Everything that was lighting up down here, okay, as at extreme bearish, wasn't that bearish anymore here. And then look what happened. Whoop. Oops. And then ultimately, another leg south, and you don't want to know what happened afterwards. All right, I'll scare the shit out of you. All right, so look big picture wise what that was now. I got to draw again my John Madden skills here. Okay, this was the uptrend I was referring to. If you look, it looks similar to where we are now. Okay, here's basically where we were. We broke the Feb lows. Okay, we had a whoosh, little rally, a little low here, and then an uptrend, right? So this looked like the bottom, And look at what happened, guys, after that. Do you see what went on? Then you had another leg lower. Then another rally here. Then the monster. Woo! This here is where I was in my bunker. Don't ask me what went on because I have no idea what took place in the market at that point in time. I was too busy liquidating bank accounts. Okay? It's funny. I get trolls on Twitter. Well, why didn't you short here? You could have made a ton of money. Because I was more worried about my money being there the next morning in the brokerage account than making money on the put side. People were buying gold because they thought money was going to be extinct. Okay? You think I'm kidding? Oh, I would have bought puts and I would have made a fortune. Yeah. All right. So that's what happened there. So I'm being honest, this was a blur to me. When this happened, this was a blur. It was mayhem. Brokerage firms going out of business. It just mayhem. I was in the business at the time. So it was just absolute craziness. All right. But I remember this, what I'm explaining to you here. I remember that pretty well, And this is something I know happens a lot, even in the worst bear markets, even this on a smaller scale here, right here. And the chart doesn't even do it justice. If you're looking at your Quotron, if you're looking at your quotes every day, if you're looking at prices every day, all right, these rallies feel like real rallies. I mean, look at what's taking place right here and the magnitude of it. There was some big squeezes. All right, so I guess the point I'm trying to make to you guys is that for me, based on my experience, what I look for in this type of climate, I'm looking for opportunities to make money out of these thingies, okay? Some I'm going to make more than others, right? Some are going to set up perfectly. Some are going to set up, there's going to be a low, there's going to be bearish extreme sentiment, and there's going to be missile sweepers or good-looking sweepers coming right into that spot. That's where, for me, I'm going to make that bigger bang, okay? This go around, like this squeeze, I didn't have much of any swing exposure because there was no buying through the holidays. There was just no action there on the call side. So the only money that I was able to make off the rally was some ETF activity, and then, obviously I take advantage of like the last couple of days day trading and stuff like that and flipping some stuff over a shorter term scale. All right. But that's what I'm looking, that's what I'm looking for throughout this whole process. And that's what I recommend if you're playing the long side, you should be focused on as well. If you're trying to chase anything more than that, I don't think you understand the degree of difficulty, especially if you're looking to size up and stuff. All right. What changes all this, okay, for me, will be the sweeper activity supporting lows, supporting weakness. All right, that's ultimately what's going to tell me the market's different, and it doesn't even have to tell me because I'll be taking advantage of it. So that, like I'm trying to tell you here, if this market retraces and we go down, we go down for a couple days, a week, whatever the case may be, and sweeper activity comes into that weakness, I'm looking to play there. Okay, the more buying that comes in, the better the quality that comes in, right? The higher the probability that low will hold for the time being, and possibly we can make that higher low scenario. All right, and that's what I'm looking for. Like out of the election, we had just flow exploded, and any red they could possibly find. Anytime there was red on the screen, any little pullback post that Trump election, they were firing missiles at everything. Names that never caught action before, industrial names and stuff like that catching action, the whole Trump trade nonsense. All right, so that's basically my outlook, and that's how I'm playing it from here. All right, and again, I'm not going to even try to lie to you and tell you I know whether this is a bottom or not. I just base it on the stuff I look at, which you guys are well aware of, and there is a higher probability that we can get an intermediate sort of uptrend out of this. Okay, but again, the answer to that's going to come out of weakness and if there's buyers into it. Anybody have any action? Anybody have any questions regarding anything I just mentioned as far as sentiment or sweeper activity? Nobody? Seriously notice those volume days on SPY bottoms, 800 million plus. Yeah, and that's another thing people are talking about, right, Gary? The volume on the updates here has been light, and the down days there's been distribution. There's no reason to sugarcoat it. I don't care if you're a perma bull, perma bear, perma whatever. There's a lot of stuff to be concerned about. Okay, economically, without a doubt, you got a global slowdown. You got Europe, looks like a menagerie, right? China's a debacle. You got a lot of things on fire out there. So if this market had more bearishness to it, it wouldn't surprise me. It is what it is. But at the same time, I know from my experience, I don't want to even try to build up a bias to where I'm blind to something may be changing, bearish or bullish. McBob saying volume has been decreasing in general over the last couple of years. Yeah. Volume as a whole just has been in steady downfall in the market, and probably options. That's what I say. I think options have a lot to do with it. ML's asking about GLD and GDX. Yeah, and we were talking about GLD today. Both GLD and GDX caught some flow. I know a lot of friends, people I traded with that were hoping to get a GLD pullback here off this equity rally so they could buy it. But this GLD is just not pulling back much. You can see here, a little bit of a pullback, but hanging in there. All right, but this would be your window of opportunity where you would be looking for an entry off any weakness here, because this thing's had a nice rally, so you would want some weakness. You got a niner here. Maybe it comes over the short term here. Maybe it comes. But obviously, gold, the yellow metal's back in play here. The yellow metal's been back in play. GDX, same thing, has been looking healthy. Up till recently, the squeeze, the only stuff catching call activity were the miners, right? Were the miners. Most recent, Newmont caught a decent looking bet. NEM, not much of a pullback, just a little pause there. But yeah, if you were eyeing these things, you're hoping to get a little bit of a pullback off the equity rally, and that's where you want to focus on possibly getting an entry there. All right, but yeah, both of them. If you're asking about the flow there, both of them, GDX and GLD, have had the only things that have had bullish flow consistently here. It was interesting. I see what you're saying. I see it too, and I agree with you. I appreciate that, Gary. Tim, review the Amazon sweeper. Which one? You talking about the put sweeper? Oh yeah, today there was what was different about today flow wise than yesterday. There was some put sweeper activity. It did come in a band early on though, and then kind of disappeared. If you guys remember, I know a lot of you guys took advantage of the short side there, but right here, was this where was the niner here? Right here? No, that's not it. Oh, no, this is it. Yeah. So right here, you had a little lift at the open. And then probably around 15 minutes in, there was a good amount of put sweeper activity in some of the stuff that's been hot, right? Amazon, that's what Tim's talking about. Weekly puts. What time was that, Tim? 7:52, so that's 10:52 Eastern time, right? No, that can't be. Oh, 9:55, my bad. 25 minutes after the open, yep. All right, so there was an Amazon put sweeper right here. And that's, if those of you who aren't members, that's what a lot of players in the Steam room are taking advantage of on an intraday basis. And that's another thing I just wanted to clear up quickly. A lot of people think I just down talk the short side. I'm not necessarily talking about intraday. Okay, intraday you can manage your risk. There are a lot of different things you can do there. I'm talking about position wise. So this was the Amazon put sweeper. There was some other put action around it, but this was a clean sweep that I seen in weeklies that Tim and a couple of people in the room took advantage of. Also, there was another decent one. Roku, I know a lot of you guys took advantage of that today. Citron, I don't know if it's them. I don't know if it's somebody getting a heads up from them. Every time Citron's ready to tout something, there's sweeper activity right before it. Sometimes a day, sometimes an hour, sometimes minutes. Today, it was Roku, okay? Right off the open, there was a little bit of bullish flow. Actually, Facebook, we'll talk about that a little, caught some nice action today. Apple, those two in particular had some bullish flow right out of the gate, okay? The one put sweeper that stood out was Roku. All right, it was the only put buyer on the board at the time and started to show some weakness. Now, you guys know Roku's been red hot. Monster squeezed these last couple of days. Look at that. Was up like $8-9 yesterday. All right, so a lot of people were looking at that for a retracement play today anyway. And then you had the Citron tweet. This is a 5-minute chart, so it doesn't really do it justice because you had time to get in and all. But then Citron tweeted that they were looking to get short the stock. They cleared that up later. And then you had this, which was extremely profitable. All right, so definitely some short candidates. And that's another thing you guys, right, are going to be looking at, I'm sure. You see some decent put sweeper activity come in, especially with sentiment a little bit hot, especially if a name has been up, in a straight line like this Roku. I'm talking again, intraday. Some put sweeper activity may create downward momentum, and you can take advantage of that. Now, if you decide to hold it overnight and get a swing out of it, you're obviously going to you're taking on a lot more risk there. Okay? I mean, you could minimize your risk via puts, but it's a lot less risky, in my opinion, on an intraday basis. And if you get lucky and catch a move like this, what these puts do? They had to double, no? What these puts do, Tim? These things had more than double. So, why swing, right? I mean, why even, you want to leave a runner maybe, but why even, is it worth the added risk? In my opinion, not really. Not really. All right, so you had that in the Amazon. Let's talk about some call activity, what we saw today. All right, again, a lot of these names have already run. They have already been littered with call sweeper activity. But one standout today was Facebook. Facebook, believe it or not, even prior to today, one of the few names that has seen consistent buying, if you can believe that. I had a swing trade in Facebook off $1 million sweep. I think several of you had. Okay. And it just continued right into the squeeze. The flow just continued. Today, which is actually rare, these, quality sweepers don't come into a rally off an upgrade with a stock up. That's pretty rare, in my opinion. Today, right out of the gate this morning, just some good looking sweeper activity. And you know what I was impressed with? You had that fade today, this, okay? And everything came down with it. And these guys just came right back. They came right back, right? They quieted down a little bit during that put sweeper band that came in. You had that downward momentum. Then once the put action dried up in the market as a whole, they were right back hitting Facebook and Apple too, actually. But Apple was all weeklies. Facebook, you had some decent looking action in there. And then, had a nice rally back, held up well, was pretty strong. Apple as well. You could see wasn't up as much. Facebook had that upgrade. Up at the open a little bit, then came down with the market, and then just steady sweeper activity throughout. So again, an example. This is an example for you, for those of you trading intraday. If we see some weakness intraday and you see sweepers, again, not just one order, right? If you want to have some confidence in the play, maybe especially in a name like Facebook, you want to see more than one. You want to see some legitimate, you want to see them be aggressive there. On an intraday basis, we'll have these trades. Because you know what? This market could easily chop around before it heads south if that's what it's going to do. You know what I mean? Not make it easy on the bears. So those intraday trades on both sides are going to be there. And as long as we still have that decent movement, volatility, that trade is still alive. So this is a perfect example. Facebook up, fade, and then you saw those Facebook sweepers come right back to support the name. A couple other things. What did I trade today? Twilio. I sold this thing way too soon. But Twilio had another sweep today. A couple of them was down into weakness. They hit it, and then they hit it again. I think when the stock was like flattish, maybe down 40 cents. And this is a nice move. This is a nice move here. Nothing significant, just some weekly activity, but in Twilio, sweepers are rare. All right, so when you see them show up into weakness, it's worth a look, especially in a mover like this. Let me get to this. I'll show you guys some of the size being thrown around out there. Not a lot of it not clean. The ETF activity today, though, by the way, don't even ask me. I don't know if it leaned bullish, bearish, neutral. I have no idea. A lot of ETF activity. If you ask me, I think earnings playing a big part in that. All right, a lot of hedging and stuff like that. Some moving around of positions. But you can see here, calls, puts, and some decent size orders too. All right, that's on private Twitter if you guys want to take a look. These are just sweeps. All right, those are just the sweepers there, ETFs. Let's get to this. Here's some of the size activity. Another thing that's been catching my eye, it looks to me like sweepers are trying to position to take advantage of something affiliated with that trade war. The market may be trying to factor in some positive news, right? I'm not talking about a resolution. The likelihood of that is far-fetched. I'm talking about even some sort of Band-Aid positive announcement on that front. But you had names like Baba catch a few buyers throughout the day. Names like this IQ, which caught some really nice action last week. That's kind of more of my setup right here. This IQ, found, trying to find the bottom here, laying dead. And then you had some pretty decent sweeper activity come in, a nice little bump up. Today was down a buck. I don't know if it was down any more than that, but a buck when the action came in, and they took that thing flat. I think it went green. But that was cheap weeklies they were buying there today. What are the Chinese? JD, that's been seeing some of that spec action. The one thing I will say about the China flow we're seeing, it's not quality. That's what's disappointing about it. It's not much quality involved. At least the more recent flow isn't. It's more of spec activity. So it's not somebody laying down a hammer saying, "Oh, we got a good feel they're gonna solve this trade war problem." It's cheapy. Like today, the IQ, decent volume, but I think the calls were going for like 18 cents, 20 cents. So obviously not much confidence. All right, but that's another thing coming into play here. The market could be factoring in some positive news on that front, and we may get a sell on the news event off that. Like the last time. You may get a pop, the initial reaction, and then that's where everybody starts to take profit. Very possible. Very possible that that's what could be going on here. Oh, Microsoft, good call. Microsoft, I got a couple questions on that. On the Microsoft front, caught a decent size order. Let me pull it up here because I had a lot of questions on that. Oops. All right, and I got a couple questions regarding what do I mean by clean. Clean, when I say an order is clean, the sweep was clean, what I mean by that is there's very little doubt in my mind that it's a directional bet. Okay, it's got nothing to do whether he's going to be right or wrong. But from what I see, the details I'm looking at within the flow, there's no stock tied to it. It's not rolling from another position. It's not selling on the offer or buying on the bid that I'm unsure about, right? So clean, in my opinion, meets all the characteristics that I want to see in a sweep. This Microsoft order, where is it? Right here. So this is the order they're talking about, right? Jan 103s, $1 million plus, opens, swept multiple exchanges. Here's the issue why I don't think it was clean. You had what looked like closing activity there. Wait, is that it? That's not the one I'm looking for. Hold on. Where is it? Where's the closing activity? I didn't post it. I think I posted the wrong line. Anyway, you had closing. Oh, here it is, right in front of my eyes. All right. So you see what I mean by that? So you have a nice size order here. That's not it. Here it is. You have a nice size order, the Jan 103 calls. Okay, but looks like somebody closed 4,400 Jan 100 calls. So the likelihood is, and Microsoft has been seeing action. Microsoft's been seeing action all day, every day. Somebody's rolling up a big position. All right, so that's the issue there. Now, early on in my career, early on in when I first started looking at sweeper activity and flow, I would see an order like this, and I would just buy it. Oh man, $1 million sweep? In a bull market, I more than likely get away with it. Okay? But I learned in a costly way, after looking in and putting in the work, that this is not a new bet. All right, so it can't be treated as a new bet. And you see people on Twitter, on TV, I'm not mentioning names, they're touting roll-ups as Bazooka Joe, as these big bets. All right, but I know from my experience, you want the cleanest, sharpest activity. That's the stuff you size up in. That's the stuff you're gonna have the most success with. All right, and a lot of times that's the stuff that comes into weakness, not into strength. Into strength, after a move already, they roll. That's what they do. They roll up. And that's what that looked like to me. All right. Good question, JD. How do I determine quality from speculation? Again, from my experience, I know that when sweepers want to roll the dice on chatter or momentum, a move based off momentum or an upgrade, they think that may be coming, something to that effect. What they'll do is they'll use weekly strikes out of the money, cheaper premium. Okay, so the spec action, when I say spec action, that's usually refers to weekly activity that may look like a lot of buying, but in reality, the nominal amount, right, the dollar amount is not a lot because those calls are dirt cheap. All right, so there's a big difference. Where the quality action is the action where a player doesn't go that far out of the money. A lot of times they go at or in the money, okay, and goes out further in time because he's making a bet, a big bet on the name, right? So the quality action, somebody's making a big bet on Microsoft over the next quarter or two. That's the quality action. Okay, the spec action is the guy who's making a bet on Microsoft for the next 3 days with a lot less money at risk. That's the difference. All right, and again, I'm using this line a lot, but from my experience, you want a higher win ratio, hit ratio, or sweeper activity, you stick with the quality. Okay, if you like to play and you're okay with losers, okay, there's some decent winners. There's some big winners that come out of the spec action, but they're more prone to failure. All right, like when we talk about like the Tepper missiles and stuff like that, those guys, they're not fooling around in weeklies. They don't fool around in weeklies. Okay, what those guys are using the options market for, they're just using it for some leverage. So they almost treat it like they're buying stock. All right, the spec action, they're rolling the dice. And another problem with the spec action, you really don't know. It could be a short hedging a position. Okay, so not only is the speculative nature in general that will add to the degree of failure, it's you really don't know what's taking place there. Okay, because if they really felt strongly and confident about the name, they wouldn't be buying 18-cent calls that far out of the money with such a low delta. So yeah, repeat sweeper activity, I would put, honestly, I'd even put behind the spec activity, lower on the totem pole. Lower on the totem pole. Okay, because for me, like initial activity is the best of both worlds, no matter what. Like as long as it's initial activity, if you money manage your bankroll properly, I feel good about you making money. All right. When you start playing repeat activity, what happens is the repeat activity a lot of times is coming in at higher levels. You know, if you tell me, well, I'm just going to buy repeat activity when they're buying continuously a name at the same exact level or lower, that's a different story. But repeat activity, for the most part, comes, you see a name continuously getting hit at higher levels. So that's, again, initial activity is the best thing out there. So I don't know, maybe Tim, what he means by that is, yeah. So what Tim means is if Microsoft catches multiple sweeper activity basically without the move happening yet. Yes, that's for obvious reasons, that's, a sign of confidence, right? That's a sign of confidence. So, and the more, that's just in general, the more you see a name getting lifted, again, the better the action looks, right? If you see multiple orders, quality orders, the confidence goes up dramatically in that play. If you see multiple spec sweepers, same thing. If I see one guy sweeping weeklies, I'm obviously not too confident because he doesn't look too confident. But if I see them hitting up, here's another example. Okay, I'll give you an example. Mattel, straight up spec action. Okay, but was interesting and worth a shot because it was aggressive. It wasn't just one weekly sweep. Yes, Facebook, right. Facebook today. Like Joey, and that's what I told you in the room. If Facebook today, if that was initial activity in Facebook, for shit sure, I'm swinging Facebook. You know what I mean? Off that action. The reason I didn't is because of this. Not only that, into an upgrade on an update. If that Facebook action happened down here, right, was the first batch of action that came into Facebook before the move, I'm not even thinking about whether I should swing it or not. I'm already in it. So that's the difference. And the reason why is not only because the stock is up and sentiment is against me and all that, that obviously factors into play, but also because Facebook caught action and a decent amount of it this whole trip up. Okay, so we talk about clean. We can have a good idea that some of that Facebook buying today was clean. There was a lot of it. But we don't really know how much of it was clean. Could be some rolling involved. The likelihood is there is some rolling involved. That's why, Joey, remember you asked me Facebook and Apple, right? Apple, I feel a little better about that action being a little bit cleaner because it didn't move yet, per se, even though the Facebook had more quality. So, but again, when you overthink things, it gets a bit confusing. Your main goal out of the sweeper activity, okay, on a swing trade basis, you don't want to. They're not confirming a move. Okay, you're not looking for sweepers to confirm a move in price that already has happened. You're looking at sweeper activity to anticipate a move that's going to happen. Okay, that's the more simple way I can put it. So maybe you look at, flow in general differently. I think your best results are going to come from looking at sweeper activity through that vision. Okay, because like I said, though, in a rally like this, bullish sweeper activity up here doesn't tell me much. Okay, it doesn't tell me much. We're down here, it's signaling to me that change in trend. Here, up here, I expect flow to look somewhat bullish. If it's not, that's what I told you, it becomes a red flag. I expect flow to be bullish up here. It's down here. Be good, Gary. It's down here where your biggest edge is. And that's, on an intraday time frame, same thing. Okay. We talked about Twilio, right? A couple of us traded today. Twilio, if Twilio up here catches action, the likelihood is I'm not really paying attention. All right. I'm not participating. But the stock is selling and call sweepers are stepping into that selling. That's my edge there. Right? It makes sense. That's my edge. For me, I'm not looking at levels. I'm not looking at moon phases. I'm not looking at Fibonacci or Liberace's. So how do I know, what's my gauge that this selling in Twilio is going to stop? For me, if sweepers are coming into this weakness here, they're giving me the heads up that maybe the tide is starting to turn. Tesla, I didn't follow it. What Tesla do today? Tesla caught some out of the money weekly put sweeper activity. Yeah, what were they? The 305 puts. Jesus, Tim, you keep track of all these things, calls, puts, everything, huh? Yeah, so Tesla had some, nothing big, but some out of the money put sweeper activity. A weekly 305s. And that too, I think, caught a couple orders. And they could be playing just a pullback here or protecting profits or whatever. Keep an eye on it, as I know you will, Tim. But if anybody's out there looking to catch an intraday short, keep an eye on that. See if they hit it up again tomorrow. Maybe you get a little green at the open. That's in early morning. You get a good indication. You really, unless you're scalping, the open doesn't really tell you much. You want to give it a good 15 minutes, a half hour, and you'll get a good idea of who's going to grab that ball first. Like you'll see flow mix up, and then all of a sudden it starts to trend, especially in this type of market. Put sweepers like that, that's the best way I can explain it. It's that band of action that comes in. Like for me, I always want to be a part of that call sweeper band that comes in for at least a scalp. And if you guys who are shorting and buying puts, you want to do the same when things line up that way. So again, like today, market's up. We should be seeing bullish flow, and then all of a sudden you get a round of put sweeper activity, grab the bull. It doesn't always pan out, but a lot of times you get some decent momentum where you can get at the least some decent scalp trades out of it. All right, let's just go over a couple more of these names here just so you guys get an idea, maybe some of you non-members, of what the action was in today, and then I'll let you guys go to your dinner. This IQ, those were leap puts. Momo, leap puts. See, this is all garbage, doesn't tell us anything. CBL, Charlie Boy Larry, a $2 REIT, caught a lot of put action today. I don't know if anybody has an interest in that. CBL. There's that Microsoft guy. What's this? Look at this, March 20 puts for 8 cents. I didn't see that. Nice. Tesla. Where's the sweeper activity here? Here's another name, but it's already been moving. ADM. This is a trade war play as well, I'm told. There's been buying in this thing last few days, off this niner actually. Archer Daniels Midland, and I'm told it's got it's a play on soybeans. China buying, or lowering tariffs on soybeans and stuff like that. You get a lot of spec action there last couple of days. Today, ton of volume. It's a slow mover though. See, slow mover. But that was a name we saw a couple of times pop up today. Let's see what else we got. JD I mentioned. EPD, Energy Transportation name, caught some action today. Boyd Casino. But that's it. That's it. The most aggressive activity out there was Facebook and Apple. Apple, all in weeklies in Apple. All in weeklies. So we'll check open interest and see how much of it's still around in the morning. AMD had some nice action when the rally started. Now some puts, starting to move in there, protecting profits. AMD is an active name, AMD is an active name. But again, for me, this is not my cup of tea up here for any long entry. Let's say, for example, if you're looking at an AMD entry here, even a short-term trade, you want to see down, right? Down a buck intraday, and call sweepers come into that. That's what you're looking for that intraday short-term play. All right, for a swing play, what you would like to see is this thing show some weakness over the short term, right? You get a little pullback to, let's say, here, and then they come in and annihilate it. And listen, that's the thing, right? If we knew this was going to pull back right here, we'd all be sitting on our own island. We have no idea. So this thing can go like this and then pull back. But if they hit it here, that's your entry. And then you get those two lows, whoop, right? See, you got your tail back here, you got your full back here, you got the tight end living on the outside playing decoy. He runs a little button hook. And you hit him, bam! Right over the middle for a first down. NVIDIA, no. There's been some NVIDIA action, though. What happened? NVIDIA caught a downgrade today, right, Goldman? So NVIDIA, you got some names out there that, some selective names showing weakness. So, George, yeah, you would be looking for NVIDIA sweepers into any upcoming weakness here. But nothing today, Georgia. Yeah, Gary, sweeper activity is all options. I take it you're new. Go to wallstreetjesus.com. Strategy section right up here. You'll get all the answers to your question. Sim CRM, as you probably know, caught some nice action even yesterday. And, looking healthy. But again, I can't, depending on your time frame, Sim, like if you told me, listen, CRM caught two really good looking sweeps yesterday, the stock was flat, I'm going to buy them, and you know what? Maybe I'd be able to flip it today, tomorrow. Okay? That I don't have a tough time with. All right? But here's the problem. Here's the problem of why I can't bless it after a move like this. Is because, like I'm saying, based on what I'm looking at here, as far as sentiment, flow, and everything else, this thing may go high, could go higher, okay? But at some point, there's going to be a wash. So something like this, okay? Now, and again, we don't know if it's just this or back down here if the market goes south, right? We don't know that. We can't predict the future. We don't know what the flow is going to look like. So that's the problem. If it's just this, you can say, you know what? I'm okay with sitting through this if it's something like this, if you got some time on those calls. But if you're in weeklies or anything like that, or even next week, you have to try to avoid this at all costs. You understand? These things kill you in weeklies. These little breathers. All right. So that's the point I'm trying to make with all this stuff, these names you're bringing up to me, guys. All right. That's why I'm saying it's not my cup of tea. I can't do it, even off sweeper activity. Here's an example. Let's say CRM catches good looking action right here. Okay. Just like it did a couple of days ago. What do you do? What do you do? Same thing, right? If you told me, okay, I bought this thing, it wasn't up on the day, it was flat, and I'm looking to flip it into something like this, all right, you can make the case for that. But if you're telling me you're buying the action here and looking for, a leg higher, worth it, risk reward wise, over the next couple of weeks, the likelihood is you might get caught in something like this. And then what do? Right? No matter what, it was probably better off. You're better off buying it here. Even if you were to lose money, you were better off buying it here, because more than likely those calls are going to be a lot cheaper based off time value alone. That's the point I'm trying to make. So here's CRM here now, right? Off a big move. If you're looking to buy it here, you got the same exact thing. May come a little bit later on, but at some point, there'll be some sort of breather that you'll likely have a better entry. George, the sweeps, George is asking why in the room, some of the sweeps I post and they don't hit the board. The board, George, is just basically a scan. Okay? So there's stuff that I pick up on before the action hits the board. Some of it doesn't get to enough size to meet the board's characteristics. All right. If this board showed all the action that I see, you guys would be dizzy. There's no criteria that I'm watching the whole entire flow. You understand? So that's why. If I had just the one, I'm not allowed to legally, believe it or not. I can't have all the flow in real time show up on the board, believe it or not. But the other reason is it would drive you guys nuts. There's enough action out there. This can get confusing already. So the reason why I post a lot of the smaller ones, one like Twilio, they, even though they're small contracts, they can be notable for that name. Okay. Or more importantly, it gets your eyes on a name before the momentum heats up. Okay. Not all the time does the momentum heat up, but at least you have some extra time to take a look at the name, pull up an option chain. So for example, George, I post a small sweep in Facebook, right? That doesn't mean go by Facebook, but pull up a chart, pull up the option chain. You know what I mean? Take a peek. Maybe you say, you know what? This Facebook looks pretty good here off weakness. If Jesus throws out a couple more sweeps, I might take a shot here. That's what it allows you to do, George. But good question. All right, boys and girls, I took up too much of your time already. All right, anybody new, there's a couple people new on here. Go to wallstreetjesus.com. Right here, strategy section on the top. All the lingo, the terminology, all that stuff you'll find there. If you want, we got a free 3-day trial, no credit card. All right, so there's no obligation, anything. You could try the room out for free, 3 days. Again, no obligation, so I don't see why you wouldn't. If you're interested, here's the premium. You get everything included in that, 50% off your first month. And if you're on Twitter, the private Twitter page, go to products, private Twitter, and you get the private Twitter feed, $59.99 a month for the private Twitter. Private Twitter is included. Yeah, it's included in the premium package. All right, so you get that with it. All right, guys, always a pleasure. This is the first time I'm talking to you guys after the holiday. Happy New Year to everybody out there. All right, good luck this year. Stay safe and make some money. I'll see the rest of you guys tomorrow.